Hello, everyone. And today we will deep dive into how I built the SOX controls from scratch. And here we are also going to leverage the frameworks and AI. And here, one remark, it is practical guide for junior specialists. But if you're already quite experienced, you can also refresh your memory, or let's say you're just learning how to design controls, because one point is to audit controls and another point is to design the control. I've been on both sides. So no big four experience required, even though I was putting into this presentation the big four experience. So let's get started. And I'm always starting from this flow. I will start with the mapping process. I refine the risk, and then I will design the controls. As I like to say, if you don't know what to do, start with the risk. You always need to start from the risk. Then you need to document it and test it first. So, before we start, I would like to share a mistake that I encountered myself and also saw many junior and not only junior especially doing. So you're starting with the generic Google of AI policies or textbooks from the COSA risk or any other frameworks that you like. And then you are starting designing the risk. This is conceptually wrong because this, where we have across the templates, AI, generic policies, textbook, COSA frameworks, etc., can enrich and will enrich your design and your work, but you need to start from the real processes, real controls. How to do that, basically? If you know the company well enough, then you need to just to try to map out what the risk associated with. I will show it later. But if you don't know, and that's something that in major part we don't know, let's assume that we are creating the revenue stream controls. And today, basically, we would be focusing on the revenue risk and the controls design for the pharmaceutical company. Maybe you don't know the process from end to end. And most probably, you don't understand what the risk associated with that. So, what I would start with, I would definitely review the current policies that you have in house. Maybe you're lucky enough, then you would have the flow charts and some narratives. And then you will go to the business owner who is responsible for this exact stream, for instance, revenue stream. It could be a couple different owners, but that always would be the one main stakeholder, or maybe maximum two main stakeholders: a finance manager, revenue manager, accounts receivable specialist, invoice specialist. But the, let's say, revenue manager would be the person to go. Then you need to understand what the systems are used, because that's also very much important to understand your risk. So then you go to this person and have the walkthrough. Yes, very classy walkthrough. In this case, let's say the AI can help you with defining the interviews and the walkthrough questions, also compiling your meeting notes. But here I would like to have a remark. Please mind the confidentiality. You cannot just put the data into your personal AI. I hope you remember that. Unless you do have the enterprise version of AI, you still can use your personal AI, but not posting any personal or confidential information. What does it mean? Name of the company, figures, process description, policies and procedures, which might contain some confidential and commercial information, and also personal information about name of the company, their some processes, number of accounts, etc., etc. I hope you understand that point. The AI could help you to navigate that, but still remember the confidentiality. So as I already mentioned, we are looking into the revenue stream and we are looking into the pharmaceutical company. So as I started, we map the real processes. We understand the real processes. What does it mean? And I will jump into my little preparation. Yes, it's here. So let's assume that you do have the process map. So you went through to your, let's say, revenue manager who described you how the process works. And the process works that we start the sales order entry into the system. Then the system checks the price. Then the system runs the credit check of the customer. Then once the credit check had been done, then we could release the goods from the house. Then we have the warehouse fulfillment. Then we do have a delivery. And then once the delivery is done, there is an invoice generation. So further, we have the revenue recognition and also, of course, the payment. So here you can see, okay, whether there are risks associated with the process or not. I would assume that every step would associate with the risk. I on purpose removed the warehouse fulfillment from here because if we consider the financial controls and that the remark and SOX, what is looking into its financial statement assertions. So that's why the temperature controlled things and fulfillment warehouse, we don't care about this as long as we do have a delivery confirmation, as long as we send this sales order and we send the invoice. So that's the most important for the financial statement. So I hope you understood that it doesn't mean that there is no risk in the warehouse fulfillment. There are many risks, but not particularly for the financial statement or for the matters that you are reviewing. How to determine the risk? It might be quite challenging, but all in all, we always need to ask what could go wrong here and what could potentially impact your financial statement and slash fraud. So you always need to look, okay, is it covering my financial statement, hence reconciliation, the correctness and completeness of your books and or fraud? Of course, you always need to look into the segregation of duties and other things, but this is important to remember. So here, for instance, based on your mapping of the processes, we identified that the key risk points are order entry, pricing check, credit check, delivery confirmation, invoice generation, and revenue recognition. So we have unauthorized discounts that could reduce gross margin. It could be also that the master data is done wrongly or segregation of duties. But in this case, we're saying, okay, the financial impact, the financial statement assertion for the revenue recognition, the most important that someone would put into the sales order something that is invalid. Here, when I said the master data, I meant the customer creation, how the customer is being created, how it's handled, whether there is a segregation of duties of 4I's principle. Why it's important? Because I basically could, first of all, if I have the access and nobody watching me, I could create the fake customer or customer who is my relative or any conflict of interested party. And then I can include their, let's say, discount or rebate. Then I can sell them in a very low price or no price at all. So that's basically the fraud. So we need to ensure that the first gate is secured. Then the second gate is the pricing check. So we need to ensure that the price for this specific item is correct. Again, it could be many other different risks, but here we're saying it's a incorrect pricing from expired contract. So let's assume that we do have pricing that was not updated. We need to ensure that master data of the price list is updated correctly. Again, here there could be segregation of duties that someone who is interested is putting the price, putting a zero, and then selling it to their relatives or creating the fraud into their affiliated companies. Then the credit check, which is very much important. We don't want to increase the bad debt from the customer, especially if it's a new customer. We don't want to have the relationship with the customer who is not creditworthy, who is not trustworthy, who cannot pay the bill at the end of the day. Again, here you can enhance, but I'm trying to explain what could go wrong. This definitely could go wrong, and at the end, it will hit your revenue recognition, completeness, and correctness of your financial statement. Then, of course, we have the invoice generation. So it's a three-way match. So you have a sales order, you have a invoice, and then you would have a payment. So everything should match. So what you sent in the sales order, let's say 5 items, then we invoice the 5 items. The price in sales order is equal to the price in the invoice. You would think that any system or ERP system that you use would check. That's not obvious, especially if you do have this lack of segregation of duties or there is some overrides in the system. The system by itself would contain some minimum controls checks like segregation of duties. But within my career, I saw many times when the companies, in order to speed up the process or avoid the duplication of this long process that a lot of people need to be involved in this process, segregating the duties, they are just overwriting all this segregation of duties through a match. Nothing is working over there. And then the revenue recognition, right? We wrongly recognized revenue. Again, coming back to sales, price, because what is the revenue? It's a quantity multiplied by price. Yes. And whether we recognize it correctly in the correct time, especially it's very much valid for 31st of December, when we have a cut-off of our annual closing, right? It's called the cutoff. So once you determine that, we need to find the risk points. Where does this process break? And then, as I said, we have this, what could go wrong. So for instance, order entry, unauthorized discounts. Could be creating the loss. It could be potential loss, expired contracts, wrong pricing applied. Again, we have a dispute or revenue restatement, the credit check to customer with poor credit. Again, that's what I mentioned, and revenue recognized before product delivered or recognize it wrongly. So we define the risk. Then what we're going to do? We're going to do the design of the controls. And I would like to first put it here, and then we will jump to the Excel that I prepared as well as a risk and control matrix, because I want you also understand what is the risk and control matrix is and how practically it needs to be created. If you're lucky enough, then you would have the GRC system, but not every GRC system would contain all necessary attributes that you would need to have, must have, and also you would need to show and demonstrate to your internal and external auditors, or maybe your auditor yourself, and just trying to design the process. Again, remember, if you're auditor, internal auditor, there is a conflict of interest of designing, but I'm not going to touch upon all of this. But still, I hope you remember that. So we remember that the first order entry process is associated with the risk of unauthorized discounts. And in here, we identify during the walkthrough that, and based on the policy, that there is a 50% of threshold. So what is lower of the 15%, we don't care. That's the risk appetite. Let's say that the company decided, not you, now your risk manager, your board, and then we need to cover what is below that or above that threshold. So during the walkthrough, we identified what I forgot to mention, that you can hit 2 targets at the same time with a one walkthrough while you are mapping the processes, while you are reviewing the risk, and then you can also understand how to design the control. There is a one trick. It doesn't mean that whatever your business owners told you that it is the control. That's why you are there. That's why you need to challenge the status quo. That's why you need to say, okay, the process is like that, but it doesn't look like control. Many people are mixing the process with the control, which is a very bad thing because process cannot be reperformed for the audit purposes. So we have the attributes. We have who, what, how, and when. Here you can see on the who and when. But I will show you here that these attributes are very much important. I will make it bigger that you guys could see. So RCM stands for risk and control metrics. You could see it in a different fashion and approach, but what I would strongly suggest you to have all the time, it's a process tab, risk, of course, that you already documented, the control activity that we need to design, the control owner. Basically, it's not the business owner, it's the person who is performing the control or responsible for the process in place if the control is automated. Sometimes we also would have a control reviewer. Here I didn't put, but just for you, remember to know, especially for the management review controls. Then the control nature could be IT dependent or manual or hybrid, or as we're saying, semi-automated, manual, automated, or IT dependent, as we say. It looks like it's very easy to determine what is semi-automated, what is not, but I will teach you. Then, of course, we have preventive and detective. I don't want to provide the list of these categories because there are many, but I would like to use very sharp and focused approach. So we do have the preventive and we do have the detective. I will show you both. Then frequency, it's based on the process and the recommendation that you would provide. Sometimes we need to enhance the frequency based on the risk. So if the risk is high and the control is key, we need to ensure that the frequency needs to be more than, let's say, quarterly. Sometimes people are saying, oh, we're going to check our revenue once in a year. That's not going to fly because we are not ensuring the correct assurance, and it's not, let's say, we're not talking about the ultimate assurance, but we are talking about the reasonable assurance, of course. But all in all, we cannot prove that everything goes okay with multiple million, let's say, sales orders issuing every day. And then we would say, okay, we're going to test it once in a year. Of course, it depends on the volume of your transactions and how automated you are. I always like to put the evidence, and this is basically the key factor for your performance and for your auditors, either internal or external, to test and ensure that this is the artifact that is going to be tested and proved as a fact of the control's execution. If it's not documented, it's not done. So the evidence is about this. We start with the order entry and the risk we already defined. And then I said that there are a couple of attributes. It's very easy to remember who, what, how, and when. This is the part of the design. So here we know from, let's say, from the process review that system automatically flag discounts that more than 15% and routes to VP sales for approval. Based on our risk appetite, we're saying that it is handled by maybe lower manager or maybe not handled at all, but something that higher than 15% that should be flagged. It is beyond of our risk appetite, and that's why it should be managed and approved by the higher authority. So here you can see what it's a system, how its entire process described, who it's the VP sales, and when before order processing. So these attributes must be there. Then let's look into based on this control design that you design. And always remember, when you design the control, it's not just a replication of the process that you heard or you read or you confirmed with your business owner, as we discussed, but it should contain these attributes and it should contain the evidence that you can basically perform via the test script. So from the design or from the control design, you should be able very easily create the test. And basically here you could also use AI a lot, because here the information is more generic, unless you do have the numbers or the names or something that would contain the important information about the items or names of the drugs, which is pharmaceutical is not, would not appreciate you to share it in internet. From this design, we could also understand that this is semi-automated. Why it's semi-automated? Even though you would say automatically flags. It is semi-automated because the system is automatically flags, and we would need to test how the system is working, whether it's really capturing the 15%, whether there is someone who is sitting and could reconfigure it. Again, there is access management, change management approach that we need to test. This is the one part. You can see the first part, the CRM approval log. And then we have that VP sales needs to approve. It could be a mail confirmation from the workflow, or it could be also the log from the system about the confirmation that this person, VP sales, approve it. So we need to test it. That's why it's semi-automated, because this person needs to approve manually. This is preventive. Why it's preventive? Because the check is happening prior the transactions. The detective is opposite. It happening after the transaction is occurred and is aimed to identify, detect the risk or fraud. So let's take another control. So I basically created the controls for every process, for every step that we discussed. So let's take something which would be detective and manual. Let's say this one. So it is about the revenue recognition. We're saying that quarterly reconciliation happening about the consignment inventory report versus revenue recognition schedule. And in case of exception, it is controlled by the controller. So it is purely manual, as you could see. You also need to remember that we need to test separately the IPE, information provided by entity. What does it mean? It means that we need to demonstrate that the reports are complete and correct and they are generated from the system correctly. This is completely different story, and IPE is pretty important, and now it is being requested by external special auditors more and more. But here for the first part, I'm just giving you very overall information. So it is manual, it is detective, because it's not happening prior. The transaction already happened, and maybe we do have a misstatement already, but nevertheless, within the year where the SOX especially is being assessed, because we're assessing the financial statement, and financial statement is on an annually basis. So that's why it is very much important to remember that it doesn't mean that the manual and detective control is wrong, but it's more expensive. It might create a lot of drama that you need to do a lot of reconciliation or changes in your books prior your financial statement closing. So that's why the frequency is important. So if there are many transactions like that, maybe it should be happening not quarterly or maybe monthly, or maybe if it is semi-annually, it should be happening quarterly. So apply your professional judgment. Then, as I said, what, who, how, and when, basically. Yes, then you need to document. And as I already mentioned, it shouldn't be very complex, but it should be very logical, which would help you to create the test script. And the test script, it's very important, because if we cannot reperform this control, is fail. It's too complex. It doesn't make any sense whatsoever. So in order to test before auditors do, This is very much important, especially in SOX, because if we fail, it's very binary, fail or pass. That would be very unfortunate for us. Yes. And what I would suggest you to do, I would suggest you to create the test script. Yes. How every control would be testing. So you need to, based on the design, you need to create a very clear test script. And again, it's very high level here, but I would like you to understand the point. You need to, for instance, pull all orders with discount more than 15% from the system. Again, as I said, we're not documenting here the completeness and correctness of this information provided by entity or populated by the system. It's another story. Let's assume everything is correct, the system is working correctly, the access management is correct. You see how many elements are impacting on that control effectiveness. For each order, verify approval, right? And check approval date is before order processing date. Verify approval has VP sales authority. I consider that AI is doing the test script pretty good. And prior to that, we were spending so much time to convert the design of the controls into the test script. But I would like you to really warn here, do not try to put immediately your control design into the AI to create the test script. Please make sure that you still have all the attributes, because the most important is to make sure that you can by yourself create more or less the test. And then you, of course, can ask AI to help you and support. Why it is important? Because it's a logical check. Because the AI could hallucinate. They can take all the garbage you will put and then just create the garbage in, garbage out testing procedure. Just remember about this. The sample size, and here I'm using this very simple PCOB framework. You can, of course, use anything different. So there is the thumb rule. So if it is the daily control, we're taking the 25 samples. If it is, let's say, monthly control, we can take 3 months. If it is quarterly, then we can take 1 or 2 quarters, depending on the risk. If it is weekly control, we could take 20 or 10 samples. But this is the kind of thumb rule. Of course, with the AI testing, it's also pretty easier to do the 100%. But again, we are considering that we're going to test it manually, and you don't need to do it 100% because this is your test when the controls already performed, when the controls already designed and implemented. As I said, it should be tested prior the auditors. Again, AI helps you go from 0 to draft control in 5 minutes, of course, but never copy AI or put directly. Customize your reality. And as I said, start with your own thoughts. Do not put garbage in, garbage out, because if you created a very bad design, then you put into the AI, and then you will get the very bad test result that you never can perform, and you will feel, oh, I designed a very good control. It's going to be tested by the auditors. We're going to do so much good things, but in reality, it could be very bad. Then what I wanted to show you very quickly some of the prompts that you could basically use. How you can say, copy this prompt into, for instance, ChatGPT. You could say, I need to design a SOX control for revenue recognition. The process is blah, 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 blah. You can create this. The risk is this. Create a control description that includes what, who, how, and when. Yes, there are many different prompts, and I would suggest you to write me the note, and I'll leave the comment, and I can send it to you. Or I will leave also the link below I will leave a link with this information, and then you can also access it. But that this is a very much important that you are not putting the garbage in and garbage out. What is the bad example of the control? 5 mistakes that will get you in trouble. Controls doesn't specify who. Control says regularly or periodically. No evidence trial documented. Control owner doesn't know they own it and never tested before audit. So let's go back to the square one, right? We start with the mapping the real processes. We find our real risk points. We design the controls that matters. We document them simply, but still clearly, thoroughly, and test first before the auditors do. So with that, I would like you guys that the information was very much helpful, and I hope you enjoyed the company, and I would welcome and appreciate your notes, comments, and suggestions. So stay in touch and see you around.